Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about a trading technique that involves trading surrounding earnings reports. This is a very high risk but can be very high reward type of trading. But again, I want to emphasize this is very, very risky type of trading. So as you guys may or may not know, this is this is earnings season. A lot of companies are reporting their particular quarter's earnings. You can see on the top here, Robinhood has a very nice summary of which stocks that are in your portfolio have earnings. You can see here, Wednesday, the 26th of July, I have 4 different stocks reporting pre-market and then 1 stock reporting after-market. So BA, Boeing, Ford, FHSY, Hershey Company, as well as Coca-Cola, KO, are all reporting pre-market today. And then O is reporting after hours. And you can see here, tomorrow, a number of companies are reporting both pre-market as well as after hours. And then on Friday, pre-market trading. And then next week, Tuesday, pre-market and after hours trading. So very, very cool section within Robinhood. And just to remind you guys, Robinhood also has a new section. Let's go down to Ford to see if they've reported earnings or not. It has a new section that's been up for about 8 months or so with regards to earnings. So you can see here, the quarter's earnings, you have expected earnings per share. These are all calculated by various investment firms. They try to go through the best they can to companies' books, trying to anticipate how profitable the company is, earnings per share. And then when the actual earnings per share come out, this is really what can drive the price of a stock. So if the actual earnings per share, you can see that is in the lighter red here, beats the darker red there, the expected earnings per share, you can expect a nice bump in the price of a stock. So the idea would be to buy before earnings are reported, hoping the company reports better than expected earnings per share, and then going ahead and selling off on that bump. But again, this is very, very risky because you're essentially trying to predict exactly if the company can beat its expected earnings per share or not. And it's not always a given that if a company beats its actual earnings per share, its expected earnings per share with its actual earnings per share, that the price of the stock will increase. With Ford here, the last quarter, you can see it's right on the expected earnings per share, but the price of the stock actually tanked on the report of earnings. So it's not always a given that the company will have a nice spike in the price, but most companies will bump at least somewhat on their earnings reports. So very, very high-risk way of trading. AT&T here, I just picked up some shares. Not sure if they had an earnings report come out or not, but you can see here in after-hours trading, a very nice bump in the price of a stock. I'm thinking there was some after-hours earnings posted here. And you can see the last quarter here, quarter 2, 2017. The expected earnings per share is a lot lower than the actual earnings per share. So I think that's what drove the price of this stock up. I was lucky enough to get in. I went ahead and bought $3,600 worth of this stock before that event occurred. And you can see here a very nice spike in the price of the stock in after-hours trading. So I'm not quite sure if that's what drove the price of this stock. I'm thinking that's what happened here, especially with after-hours trading like this. Every time you see a big spike either up or down in either pre-market or after-hours trading, it's typically because of some sort of report, either earnings report or maybe a recall. For example, Ford had a recall that drove the price down over the last week. But it's usually something that is with regards to a single event here. This isn't really the market dictating this. This is more of an acute event, an earnings report, some particular bad piece of information. Maybe a popular CEO is leaving or one of its products, for example, a biotech pharmaceutical company was not approved. You can have large swings in aftermarket or pre-market trading. But for the most part, earnings reports are very, very volatile way of trading, very, very risky, but you can make some very, very good gains with this type of trading. So I'm going to take a look to kind of see how the earnings reports shake out for both Ford, Boeing, Hershey Company, to see what happens here. I think quarter 2 is the quarter that is being reported here, so Ford definitely beat its expected earnings per share. Let's go to Boeing to see exactly what's happening with Boeing. Again, this is about a half an hour before trading is begun on Wednesday. So I'm thinking this Q2 is all of the earnings that are being reported today. Let's take a look at O to see if they have Q2 earnings, because that is going to be reported after hours today. So let's go down to my real estate investment trust. Oh, Yeah, O has not had Q2 earnings reported. So Q2 earnings are the earnings that will be coming in. So you can see here, this is still pending Q2 2017. You do not see an actual earnings per share with this particular company. This company's been doing very, very well. So this may be a company that you would say, hey, let's go ahead and buy a couple $1,000s worth, a couple hundred shares, expecting that the actual earnings per share will be much higher than the expected earnings per share, and there'll be a nice little bump in the price of that stock. When that happens, you can sell off and make a good little either day or swing trade profit. So yeah, that is trading on earnings reports. I've done this in the past, but this is very, very risky. You're simply trying to predict what's going to be happening with the expected versus actual earnings per share, and that's really hard to do. You're simply gambling. Unless you have some other piece of information that is dictating otherwise, it's very, very high risk. But you can make a pretty good profit on trading some of the different companies' earnings reports. Some companies may have an obvious bump in their particular earnings that will beat expected earnings per share, but essentially when that news happens, the price of the stock will bump up, not necessarily on the actual date that expected earnings per shares come out, or excuse me, that actual earnings per shares come out. But every once in a while you'll have a company, I think Apple is a good example of that. Their last earnings, they were expecting to beat their expected earnings per share. When they did, there was a nice price spike with the stock, so that could have been a good day or swing trade. But yeah, just wanted to quickly overview trading earnings reports. This comes from a question from one of the viewers. I'm sorry, I don't remember exactly who mentioned this particular type of trading. But yeah, trading on earnings reports, very high risk way of trading. It's definitely viable, but it's viable if you have some other information that's telling you that a particular company is going to be beating the expected earnings per share when it comes out with its actual earnings per share. So just quickly wanted to go through trading on earnings reports. This is earnings season. A lot of companies are reporting earnings, so lots of movement in stocks, lots of opportunities to do day and swing trades with some of the different types of earnings that are reported, either pre-market with a swing trade or even a day trade. If you have Robinhood Gold, then you can do some trading during pre-market and after-hours trading after earnings come out in pre-market as well as after-market trading. So yeah, just wanted to quickly talk about that. Don't want to make the video too long, so I'll kind of end it there. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. This weekend we'll be doing the 10,000 subscriber giveaway video, the Amazon gift card giveaway. I think that's going to be a lot of fun. I'm going to try to do that live. If I can't get it set up live, which I think is about 50-50 at this point, I will definitely record when I am doing the program that does a live pick of one of the comments on the video. And that program will essentially be picking the folks who will get the Amazon gift card. So it'll be completely random. I'm going to go through and make sure everybody has one comment per video. I know a few people were putting in 20 or 30 comments on that video to increase their odds, but I think I'm going to try to make it fair for everybody. So I'm going to go through and just screen down one comment per individual account. And yeah, we'll do some giveaways over the weekend. So as always, if you guys enjoy my videos, feel free to like, share, and subscribe. Any good video ideas, trading strategies. This trading strategy, again, was actually mentioned by a viewer. I'm sorry, I don't remember exactly who mentioned this. This was about a month ago. I put it on my list of videos, but forgot to put down the viewer who suggested this idea. So I'm sorry about that. If it was you, please let me know in the comment thread down below. But yeah, kind of with that, I'll end the video, and we'll see you guys next time.